Good morning, folks, and welcome to today's video. So I hope you had a great weekend, by the way, and if you were working over the weekend, I hope you had a constructive weekend as well. But without further ado, because we've got a lot to get through today, I'm going to break down the pairs which I haven't watched today for you now, and those are Euro CAD, West Texas Oil, Pound Kiwi, and Pound Aussie. So the market looking pretty good this morning, in my opinion and experience. So what am I looking for from these pairs today? Why am I looking at these pairs, and what is the story that these pairs are telling me? Well, we have this sharp move down here, followed by this sharp move up, which just so happens to be the base of this piece of structure here. So this overall structure here, which has a clearly identifiable middle section. So we have this 1, 2, 3. We have a 1, 2, 3 wave move within that, and it's no surprise to me that price reacted from the base of this structure, because typically speaking, price reacts more violently from not just sharp moves down and sharp moves up such as that, but it moves more violently when they happen to be the base of a piece of structure or the top of a piece of structure. So what happens? We break below. We know that on the higher time frames, we typically break below a higher time frame liquidity point before rallying to the upside, as opposed to just tapping into it, because people tend to listen to the media narrative that price is at XYZ low, and when it breaks below, they think it's just going to keep going, and many of them don't really know how to get involved, so they just get short any old way, particularly if they believe what was previously support becomes resistance once it's broken below. And in the majority of cases, the bigger players are just looking at this as a bargain area of value for a buy, unless there's been some kind of fundamental change, which we can usually see on the lower time frames and sometimes on the higher time frames by way of the structure. Okay, so we break below, we tap into the area, and then we rally aggressively. So then we have this impulse. You would see this one more clearly on the lower time frames, but we have this impulse correction continuation, and now we have an impulse correction larger continuation to the upside to potentially take out this high, because this high last time around failed to tap into it. This is what we call a near miss. When we have these near misses, often price will find its way up to back up to this area to take out the high that it narrowly missed last time around. We also typically see these larger structures about halfway within a range. So within a range, I mean from here to here. So that all ties in as well. We also have, as I just highlighted a minute ago, we have the base of this piece of structure. We move up, we come back down, we near miss it. We have the what I call the FOMO leg. So we move up, but we do so quite correctively. And the clue to me that we were going to come back down was this sharp move down here. Okay, meaning, in my opinion and experience, that there were still orders in this area and orders being placed in this area, which were dragging price down whilst these people were trying to buy this in this FOMO channel. Not everybody, as I've said, has FOMO that bought in within here, but there will certainly be some that were waiting for price to get to this area, and then they saw it start to move, and then they got long and they thought, oh, okay. Many of them may have said things like, oh, it's okay, I'll have my stop loss under here, I'll be fine. What happens? Price comes crashing back down, fills the near miss that it failed to, the near miss to this low, which it failed to tap into last time around. And then we break below, wash everybody out, just as we did down here. And then we push up aggressively, and then we have that kind of morning star formation. So as I drill down, you can see you couldn't make this thing up. So people that say that patterns don't work, well, how can something, by definition, a pattern is something that repeats itself? How can something that repeats itself not work? That doesn't even make sense. Okay, so as we drill down, oh, look at this. What do we have? We have an impulse correction continuation. Price comes down. Are you noticing a pattern here, folks? We get close to this area of value. We don't quite tap into it. Price pushes up, but it does so correctively. Okay, that we then have this move down and this move back up. This move down here, just as I touched on the higher time frames, was the clue to me that price was going to come back down to here, as was this corrective move up, it has to be said. This move here tells me that orders are still being placed down here, whilst the people that got long here are trying to buy this. Okay, so we see the same psychological patterns repeat themselves over and over again. What happens here? We push up. but we do so correctively. Okay, how have we moved up? Did we move up impulsively? No. Why didn't we move up impulsively? We didn't move up impulsively, likely because there are still orders down here that need to be filled, and orders being placed in this area, which are dragging price down whilst people are trying to buy this. Okay, so previously I was looking at this as my area of value. If you watch my videos regularly, you might be thinking, well, previously you had this as your area of value and price, and I said that price near missed to there. And the reason I was looking at this is because we reacted aggressively from that last time around. This is true, but how have we moved up? Have we moved up aggressively? No, we've moved up correctively. We've had one slightly bullish candle, and the clue for me that we were going to push lower is that on the 4-hour chart we had this bearish candle like that, which had a wick below it. These usually get filled. Okay, the wicks of these usually get filled. I've seen these so many times. And on the daily chart, we had this bearish candle. Okay, these usually get filled as well. The wicks below there usually get filled on those bearish candles. So when we have it on the daily and the 4-hour chart, this wick did get filled, but we moved up very correctively. So that to me indicates that this is not an area of value because there was not enough liquidity there to send price to the upside in an aggressive manner. If there was, then it would have done so. So what I'll be looking for with all that in mind is the following. So now, because I'm seeing this as the area of value, I'm looking for price to tap into that area, wash out all the orders, push back up and flag, and then I'm not worried about managing my trade to this high, because if price taps into that area, then it will have done what it needs to do to push to the upside, and I will be able to manage this up to this first inflection point for something in the region of 4%, and then up to the highs something in the region of 6.5%, depending obviously on the size of this flag. Okay, so that's all I'm going to be looking for. If I get the risk entry within the flag like that, then even better. Obviously, the risk to reward increases. I may need a slightly wider stop loss there, but we shall see. But that's what I'm going to be looking for from Euro CAD. So I'm going to move on now to West Texas Oil. So West Texas Oil on the higher time frames, you can see this was just me doing a bit of pattern separating. I think I was doing that over the weekend, just practicing the looking at the practicing identifying the structures that we look for. But on the higher time frames, the narrative as I see it, I've just removed that just for simplistic reasons. So we have this high here. What happens? We push down, we come back up, we near miss to it. What happens again? We push back down, we push back up, we near miss to it again. Okay. Now it doesn't necessarily mean that there are still orders in this area, given that this was 12 years ago. But what it does mean is that this still remains a high area of value because it hasn't been tapped into in the past. Okay. What happens? We come all the way down. We break these lows, we break that low, and then we push up aggressively. Look what happens when price does find enough liquidity. It breaks the low, pushes back in, and then we get a correction like that, as opposed to what I just showed you on EuroCAD. So if there was enough liquidity somewhere, typically speaking, price will break the low and push back up aggressively like that, not in a corrective manner. So then we push all the way up to here, we break the high. People think that this is just going to the moon now because it's broken the high. What happens? It comes crashing back down. But notice that we have this wick here. If we just drill out to the monthly, yeah, that's exactly what I was expecting to see. When we have these bullish wicks, these green wicks, so a green candle with a big green wick above it, price will often come back to fill the wick or fill the majority of it before pushing to the downside. So when we broke this high here, even though it has to be said we wicked through it, which is a positive, we also had a bullish green candle with a green wick above it. So it's no surprise to me that price came back up to fill the majority of that wick before pushing to the downside. Okay. So we've washed out all the orders that were up here, and now we're moving by way of impulse correction continuation. We then have this 1, 2, 3 structure. And typically speaking, when we see these, if price is going to push lower, these typically take, and if price is going to tap into this area, it tends to take quite a while to do so. You can see that we have this 1, 2, 3 structure here. Notice that this is a green wick again. I am mindful of that. These are things to pay attention to. But price has tapped above there. It has done what it needed to do. And not all of these wicks get filled straight away. Some of them take a while to be filled. So if we just drill down, you can see that we have this kind of expanding pattern where we have higher highs and lower lows. We also have a near miss to there, which will likely get filled. Okay. So, and we also have an intentional 1, 2, 3 last leg. So it's no surprise to me that we tapped into this area and then pushed down aggressively. Okay. This 1, 2, 3 indicates that this is potentially a complete structure, as does this 1, 2, 3 here. We then have this impulse correction potential continuation. As I drill down, you can see. Now, I was looking at this as an area of value, but what did price do? It blasted straight through it without respecting it at all. That tells me that there was not enough liquidity here to send price to the downside. So we have that kind of 1, 2, 3 within this 1, 2, 3, and you even have here a 1, 2, 3. So there was not enough liquidity here. So the next question I asked myself, well, if we are going to the downside, then where is the liquidity sat? Well, if we just drill down, you can see that we have this little inflection point here. There's a little bit of consolidation here, right? Now, you can't really see it on the 1 hour chart, but if you just drill down to the 15-minute chart, if we just drill down to there, you can see this area of consolidation. I want to zoom into this, okay? So we have this area of consolidation there where there was a sharp move up and a sharp move down, which was the causation of this move here, okay? It also just so happens, if we just zoom back out, to be the back end of that. So if we react from this area here, then we would also be retesting the back end of this correction as well. So that kind of makes sense as well, why it may react from there. We also, just to touch on it, have a near miss. We got close to this area of value and near missed it. That also indicates that this is potentially the area of value now. Okay, so with all that in mind, and bearing in mind that we also have this kind of the 3 drives that we look for, a completed middle section. So we have this, whoops, I didn't mean to do that. Okay, let's get that off the screen. Okay, we also have this, if we just have a look at this, we have this first drive, second drive, third drive, giving me a clue that this is a completed middle section within this 1, 2, 3 for that potential 1, 2, 3 to the downside. So with all that in mind and being mindful of the time on these videos, if we impulse down, if price impulse is down where it's from, where it is at the moment, it's kind of stalling in that area of value, potentially collecting all the orders, then I will be looking for a impulse down followed by a correction, and I'll be looking to get short on the break of the correction or within it. And you can see that I would easily be able to manage it down to this low, and more likely, you know, if we push down to this low, then we would have retraced 80% of this move from here to here, so we would likely find our way down to here as well, but I'd easily be able to manage it. So a risk entry within the flag or a reduced risk entry on the break. So that is what I'm going to be looking for from West Texas Oil. Speeding up ever so slightly, I've got an alert there just to see if we can break that low, break down below that low, and we shall see what happens. So on this pair here, I'm just having a look at this. Yeah, okay. So on the daily chart, if we just zoom out on this one. So we have this high here. I've just cut through these, just kind of disregarding these wicks, because if we just switch to the line chart, if you focus on this wick here and this wick here, if we just draw to the line chart, they don't appear on the line chart. So that, in my indication, indicates that, in my opinion, indicates that these are just volatility spikes, so we can disregard them. But what do we have? We have a move down here. We have a sharp move up, sharp move down, giving me a clue that this is a high area of value for a sell. Okay. We also have this sideways non-progressive area, which is typical of this pair, pound Kiwi, for a very, very long period of time, a couple of years. Then price breaks the high. What happens? People think this is going to the moon. Apparently resistance is now support. They start buying. It comes crashing back down again, and we have the impulse correction continuation, which pushes lower. So we've seen these patterns repeat themselves over and over again. If we're disregarding this as a wick, what do we have? We have a near miss to here, a near miss to here, and a near miss to here, which will likely get filled. So that all makes sense. And then we have the impulse correction continuation. And what I like about this pair is the aggression with it that we had with this sell-off here, giving me a clue that if we impulse out of this correction, we will likely do so with a similar level of aggression. If we just measure the impulse as well, we will likely do so. The impulse out of the correction tends to be of a similar length, which would take us to there. And if we measure it on the break, that would take us down to these areas. So Very nice indeed. What do we have? You can see that I was forecasting this last week. We have this, we break above the high, break back in, and now it looks like price is moving to the downside, certainly at the moment. So it's no surprise to me that we pushed a little bit higher because we previously tapped into this area more or less, and price didn't find enough liquidity to send it to the downside. So often it's the case that we need to break above it to tap out the liquidity if we've already tapped into the area for price to actually move lower, and that's exactly what happened. So we have that impulse correction potential continuation. Within that, we have an impulse correction continuation, and within that, we have an impulse correction continuation. So tell me that patterns don't work. Okay, so we see these things time and time again. So price has no business moving higher now because it's done what it needed to do. So with that in mind, and once again being mindful of the time limit on these videos, what I will be waiting for is the following. Let's put that chap back in his rightful place. If we correct, all I need price to do now is correct sideways so that I can identify a flag, and then I would look to get short on the break of the flag or within it, and then once again I'll be able to manage it down to these lows easily for something in the region of 6%. And by 6%, by manage, I mean not just get my risk off of the table, but actually take some profit, be able to trail my stop in such a way that I'm actually able to take some profit, as opposed to just being able to get my risk off of the table. So in this instance, there's no alerts on the chart. What I've done is I don't know if you can see my apps that I've got on my computer at the bottom of my screen. Probably not, but I've set a Google Calendar reminder to remind me to check this pair in an hour's time, just to see what this correction here is looking like. You can see this is just an undeveloped flag at the minute. Okay, so this is not a fully developed flag relative to this move down. So I'm just looking for price to correct sideways so that I can identify where the orders by the bigger players are being stacked. Once I can identify that, I can identify where I'm going to get short, or if I'm going to get short within the correction. Okay, so once I can identify where the correction is and it has some structure to it, then I'll be able to place an entry. So that is pound Kiwi. Pound Aussie looks pretty much the same, but I've just got it slightly lower down just because I like pound. There's multiple reasons, but pound Kiwi has been more direct. So that's one of the reasons that I like that. And in this instance, we also have a high above price as well. We also have this full-bodied, not a wick, a full-bodied high above. These are wicks, but we have a full-bodied high above price as well. So that's partly why pound Aussie is lower down versus pound Kiwi, where it's just volatility. Okay, so that's one of the filtering criteria, and also just the aggression that pound Kiwi sold off with will likely replicate itself. So on this instance, we have the move down. We have on the daily chart, you can see it more clearly. We have this sharp move up there, sharp move down. We wick to that area, but we don't break above. What did I just say about pound Kiwi on the lower time frames? If we tap into an area, but we don't break above it, then it's often the case that we'll break above it next time around, because obviously if we've tapped into it, there was not enough liquidity at the price, so perhaps the liquidity is sat above it for price to rally to the downside. We have a wick there, which near missed to the start of this structure. So we have this 1, 2, 3 touch structure, or you could identify it from here, but you can see the structure there. We have this 1, 2, 3 middle section within this 1, 2, and this kind of 1, 2, 3 wave move. So that would be a potential profit taking target for people that are getting short. Where I'm looking to get short today, you can see that on the daily chart, we have this potential evening star formation. So you have the impulse correction potential continuation. I've got to speed up now because they don't give me much time in these videos. We have that 1, 2, 3 wave move. We can see the 3 drives within the middle section: first drive, second drive, third drive. We have a 1, 2, 3 last leg. And I said to you last week that this was about as clear as you could wish to see for a move to the downside, about as textbook as we could wish to see. So with that in mind, what I'll be looking for today is the same thing again. I'll be looking for price to correct sideways. I do like how we're correcting below this low as well. That's just another little positive confidence factor. And if we get this, then I'll be looking to get short on the break of the flag within it. I'm not worried about this trend line now because this is just a guide which helps us identify that this structure has completed. And I would easily be able to manage this even to this trend line, but down to these lows for a tidy little profit. That is my thinking today, folks. That is my forecast. I hope you've taken some value from this, and I will see you again in the next video. Thanks for watching.